that what could be the complex scenario for information retrieval, or maybe for data analytics. And we have a brief discussion with our uh, experts, existing experts or experts which have given the consent for the resource person. So they have suggested that, and basically from the last around 10 to 15 years, uh, this information retrieval or data analytics has been explored in the application domain of financial analysis or financial related transactions, all those aspects which are somehow related or somehow generating the financial data. So we have that's why we have focused upon this one single session, and to understand that what are the difficulties, what are the different issues which basically financial transaction or financial data could rise or could raise to solve, right? So that's why we have planned this session specifically to understand the different aspects of, I mean, in the form of challenges and or in the form of issues which could be solved by using machine intelligence or existing machine learning techniques. So with us today for this session specifically, we have Mr. Vishal. He's actually our alumnus, an IT Kurukshetra alumnus. He passed from our institute 3 years back. He graduated in master's degree from our institute and got placed in American Express. So it is a opportunity. It is always an opportunity to listen to our students. I mean, not students, to alumnus, because they are getting kind of experience, kind of exposure to the global perspective, right? That's what something which, as a institute, as a individual who are working in academic institute, we are actually lacking. So whenever we got opportunity to listen to a alumnus or a student who is currently working in the industry, it is always always fulfilling, because he or she always add a few, or you can say top of the ice things, right? So because we used to see these things maybe after 5 or 6 years down the line, but they used to provide instant or spontaneous information about these challenges and issues. So I formally welcome Mr. Vishal for this session. So I think we have got around 43-45 participants. The remaining will be joining in the next 5 minutes. So we can start this session right straight away. And if you feel that questions can be answered during the session, you can take or read the chat box, or maybe I will be taking care of the question maybe at the end of the session. So whatever approach we can take, you can take, and we'll start discussion. Thank you.
Okay, thank you, Vikram sir. I hope you guys are able to hear me loud and clear.
Yes, perfect.
Okay, just let me try to share my screen. Just a second, please. I think might need some permission.
It's okay.
Okay, I might have to just join in again because
it's okay. Okay, we are waiting for that.
Couple of minutes, okay?
Right. So till the time Vishal is reconnecting with us. So now I have got a mail from our expert for the session 3. He's having some kind of medical emergency in his family member. So we have a slight change in the session 3 for today's session 3. And instead of the session which we have planned with the expert from Microsoft Research, we have make a shuffling arrangement or kind of different arrangements for that session. So now in the session 3, we will be having our one of the faculty of NIT Kurukshetra. She's working in semantic web, right? So because semantic web is again one of the prominent research or application domain through which we are solving or we are taking care of the various problems on information retrieval or information search. So session 3 will be now covered by Dr. Sarika Jain. She is one of our colleague or working in the department of MCA at NIT Kurukshetra. So we will be having that session 3 on with her only, and we will try to understand. We will see how basically semantic web could be applied or could be utilized for information retrieval related issues or issues in the information retrieval. And basically she is working on kind of meta ontology. So that is something which is kind of unique, or which is kind of a novel direction which has been explored from the last 4 to 5 years. And just because of we are getting a lot of information, a lot of data, so now getting something related to meta ontology will always a good experience. So let's have that opportunity to understand that how ontology or meta ontology could be adapted for information retrieval or information search related system design, right? So that's something I wanted to share. Now, one particular request I wanted to make here, that though we are having only last day as a whole day, because now we have done with the second session of the today's planned schedule. Now we are going to the last day of the FDP. So I want to raise this request. Kindly join these sessions on time. As a coordinator, that's the best thing I can request or expect. Kindly join the sessions, because today is the Saturday and tomorrow will be the Sunday, which is off day. So try to join sessions on the time. Try to stay during the whole duration of the session. That's two thing. Second thing, if some other participants, registered participant of the FDP is your related, who is registered for this FDP, try to communicate them that they should be also connecting to this FDP for different sessions, right? Because I have got this kind of relation that as we are progress towards the end of the FDP, we are getting lesser number of participants during the session. So that is something not encouraging, uh, at least for the coordinator, right? Because we are spending basically energy, we're spending time with the meetings and with the sessions. So it is the best we can expect, right? So okay, so let me see whether Vishal. Okay, he's now sharing the screen, so that's best. So yes. Okay, Vishal, do you have any still some problems? Okay, your screen is perfectly visible too. Yes. But we are missing your audio. Vishal, we are not able to hear you, so you need to fix this audio part. Yeah, so you need to unmute yourself first.
Yeah.
Yes,
Okay.
say please. So
I hope. Okay. I hope you guys are able to hear me now.
yes, you're perfectly available to us, your video as well as audio. Now we want to see the shared screen presentation.
Yeah, I'm just trying to do that. Actually, I've been using different applications. This is first
Okay.
time doing it.
So, this is a simple, I mean, there is a simple, but I mean, option given present now. From there, you can share the open file, any file. I mean, you have opened that PPT in your system, so you need to share uh, that particular file by selecting a Windows. Present under present now, you can select a window. So in that window, your window which is having this PPT part open, so you can select that simply.
Okay, let me know if you guys are able to see my screen.
Yes, yes. Yeah, it is okay. Available to us now. So
Okay.
yes, it's good. So I think we can start it straight away. Vishal, we can start. You can start this. Okay,
Yeah.
thank you.
Okay, cool. Okay, hello everyone. Apologies, I think the application got stuck for a few minutes. So this is Vishal Shokan. So I hope you guys are enjoying the sessions which we have been going through from the last few days. I myself got an opportunity, to go through some of the sessions, and many of them were very informative, almost all of them. The way I think this session would give you a different taste is, I think this session entirely brings different perspective by giving you a view of practical applications of all the research work which we usually go through. I think every one of us are aware of the field machine intelligence. It's just a combination of machine learning applied with artificial intelligence. On top of it, there are few more new layers which are coming up. Like the machine should be able to modify the algorithms itself so it can learn faster and all those sort of things, which is how the term machine intelligence itself is coming into picture. So let's just set the scope of our discussion, so we can understand what this discussion is going to be all about. So one of the core sectors where we have a huge implementation of all the machine learning algorithms coming up are the financial services sector. When this sector initially came up, it was all about the financial services, and when the technology evolved, even before the technology evolved, the technology slowly started impacting this sector. All the services we see today, the savings, your savings account, there those can be accessed online, all the transactions can be made online banking, and all the other trading and other services, these come under financial services. And when these services are integrated with the technology, a new term that comes up is FinTech, the financial services technology sector. Now, FinTech is an interesting term. We'll discuss about that in a bit. Just before that, we are setting the scope. So the scope of this entire discussion would revolve around the applications of machine intelligence in this particular domain only, FinTech. Okay, so what we'll try to do is the algorithms itself, which have been used, like I've been using these algorithms in our across our industry. Whatever I have read about, I've gone through that. The algorithms itself are very standard. Around 90% cases are only covered with the top 5 or 7 standard algorithms, like support vector machines, you'll say the clustering algorithms and decision trees or XGBoost. All these top 5-7 algorithms, these cover 70 to 80% of the cases. So it's not about the upcoming new algorithms, or you can say modifying these algorithms as such to implement them in a way so that they need to be customized for any of the sector. The key point is to understand what range these algorithms can be applied to solve any problem, and what are the leftovers. So the leftovers would be essentially the interesting part. If you have a problem domain, let's say the size of a circle, what you can essentially think of is any algorithm applied solves the problem like in a square. You can try to fit that square inside that circle, but it obviously can't cover all the area of that circle. And those leftover parts, those are often, we have to find a way around them, just by applying other techniques of automations, or sometimes even keeping them manual. So the objective of this discussion, I think, would be to understand those leftover parts, so we can understand what are the challenges which industry faces when we take up these algorithms and try to apply them to the real world problems. Now, before moving to the applications itself, which have been chosen very carefully, let's just quickly go through this term FinTech. So every one of us is completely comfortable with the domain. A FinTech is, like I said, a combination of two terms, the financial services sector and the technology sector. When these two sectors came together, it was the technology itself which financial services sector tried to leverage first, and any business which used technology to enhance its financial services or provide new financial services was termed as a FinTech. And like you guys might know, it has billions of worth all over the world, all over the world economy, and all the standard services which we used, the investment, savings, tradings, payments, lendings, all those services come under the FinTech. Nowadays FinTech handles all of them. So neobanks are in fact the banks which don't have any physical presence at all. They have no branches or anything. They are totally dependent on technology to provide services to their customers. Cryptocurrencies and blockchains, those are probably the new coming in technologies which don't directly fall under the umbrella of fintech. They are kind of assistive technologies to fintech, which are increasing its range. So combined together, fintech with cryptocurrencies and blockchains, they provide even more services. So another thing, another interesting and what I would like to discuss with you is the way financial services and technology combined together, they are evolving. That's a very interesting aspect. So what used to be was that the financial services used to embrace technology. Any sector used to embrace technology, to provide better services, to improve upon things, or to provide new services under its own sector. Sometimes the whole new sector would come up due to this, but that was rare. Essentially the parent sector would remain the same, which embraced technology. But in this sector, if you see, it's also the other way around. The technology, the core technology giants, like you see Google, Amazon, Facebook, now WhatsApp, those technology giants have started coming towards the financial sector the other way around. Now they are not waiting for the financial services to adopt these technologies. In fact, they are going the other way around, because they need that data, that customer data, that how someone spends money. That gives a huge advantage to any of the technology giant. And if they have that sort of data, they know how a person is spending his or her money, how an organization is managing its money and its resources, and how they are spending on it. They can change the way they provide services to those people. So you might have heard about Google Pay. Google is coming into GPay, and what even through WhatsApp, they are also like integrating those payment methods. So that's the whole sector is going towards each other. The financial services, they have always been moving towards technology, and now technology also is moving towards financial services. Obviously, the technology part, they have their own challenges. Like financial services can never compete to the technology giants with the tools of technology itself. But the advantage financial services have, on the other hand, are mostly related to the compliance. The technology giants, they would never be able to overcome those compliance related things, and all the market compliance and regulations which needs to be taken care of. So those are somewhat difficult for them to handle on their own. So both are dependent on each other right now, and one thing to observe closely would be how it evolves and which sector eventually takes over the other. So I hope this gives you at least a broad perspective on the term fintech, and the applications which we would be discussing next would make much more sense to you after this discussion. So let's move to the applications. So we had a lot of applications, machine learning and machine intelligence, artificial intelligence. These are the terms which you can apply to essentially any service in any number of ways. So we had a huge number of applications, and eventually we cut down to these 5 applications which we think provide you overall different perspectives, cover the broader perspective well, and also give you the set of challenges which you can ponder upon, which you can think upon. And once you go through these applications, it's just not the financial domain which you would be able to appreciate, but I hope we would be able to appreciate the overall impact of research when it moves to the real world, and what are the challenges people face when they implement those research works directly into their day-to-day work. So we have 5 applications which we would be covering, and for every application we have a fixed set of methodology. We'll understand what that application is essentially. We'll understand, then we'll see quickly what is the data, what is the type of data which is used by the machine learning algorithms. in that problem statement, and that is, I think, the most important part. What data do we have available defines to a lot of extent how much or in what way can we solve the problem. Then the commonly used algorithms which we used in that industry, will just skim over it. We won't go into the details because those are the standard algorithms you might have gone through hundreds of times. Then I think the most important part would be to understand what benefits it brings in, and what are the open challenges which still remain. So the last two parts is where I think we would be focusing the most once we understand the problem statement. So we'll begin with the first of our applications, which would be profiling customers. So the problem of profiling customers is essentially, the core core for any business, I think. So what it essentially states is, banks, they have a responsibility towards not only the government but towards business itself. They can't, they can't serve their customers blindly. They can't think of their customers as just an entity, because which would just simply pay them and they will provide them the service. The customers can have an impact back on the banks. So if I say a customer applies for a loan in one of the in any of the financial banks, and that loan is approved, and then the customer, it walks back, it says, okay, I'm not paying this. So that becomes a negative impact on the bank. It's not like just a service which customer has paid for, and it's now, you can just say, hey, it's up to you, you want to use service or not. We have done our business with you. We have we have marked you as one of our sales for today. If you want to come back tomorrow, that's okay. If you don't want, that's also okay to us. It's not that kind of a sector. The customers, they are closely related to the banks themselves or any financial institute which is providing them a service. So the very first step which any financial institute needs to take is, the profiling of its customer. They need to know about their customer. Now what you're seeing here is essentially a broad view how you can segment your customers. Whenever a customer is coming in, you just take in few information from him, you collect few more information, and then you segment that customer into broadly, which says, okay, this person can be this much useful and this much dangerous. Those are the two broad profiles which any financial institute prepares, and a combination of both of these, FICO score you might have heard about. So it's essentially states how financially stable you are, and those kind of different scores. Different markets have different names for those kind of scores, but essentially they are ranged from a lower range to some higher range, and usually the higher range defines stability and the lower range defines instability. So based on that range, you provide services to that customer only based on that profile. Okay, so let's go through what are the most commonly used data. Let's quickly walk through it. So it's just mostly the demographics. What is your income, age, gender, and what is your financial background, what kind of history you have already with the bank. Those are the kind of variables which financial institutes try to leverage while profiling any customer. Sometimes geographical attributes are also useful. When there is in an economy which is constantly going down, you would like to play safe, and in an economy which is rising sharply, financial institutes often take risks to give more advantage to themselves or to the customers by giving them more than what their profile actually suggests. So all those players come into picture, but once we have a profiling ready for the customer, it's only then you can decide what can be and cannot be granted to any of the customer. So let's assume we have this data available, then we profile a customer. What are the benefits we get out of it? The most commonly used algorithms, like I said, XGBoost and artificial neural network, those are the two most commonly used algorithms which I have seen while profiling the customer. Sometimes very simple algorithms are also combined, and multiple algorithms, a result of multiple algorithms, it is used to average out the profile. Simple algorithms can consist of your clustering algorithms, or sometimes support vector machines can decide whether or not to even enroll a customer or not. So those simple algorithms combined with these algorithms essentially provides us the full profile of any customer, which banks can finally deal with. So these are the some of the benefits. Once you have profiling ready for the customers, a risk or profitability profile is created. Like I said, a risk profile essentially just states what is the risk profile of this person, how much can you trust this person, and profitability profile is just almost synonymous, but the other way around. It shows you what are the services which would be appropriate for this customer, and what services would not be. It's just slightly more accommodating than the risk profile, and it uses slightly more data than just a simple risk profile. Risk profile is a more general term, you can say, and profitability profile, you can say, is somewhat more specific towards services. And before initiating absolutely anything, we are required to have profiling of the customers ready. And it's only then banks can decide what kind of business they can move into, and what can be the terms of the business, how much risk are we taking, and accordingly, the terms of the business change accordingly. If the risks are high, obviously your interest rates can go high. If the risks are low, your interest rates can go low. So those are the kind of terms which are impacted by the risk and profitability profiles. So although it seems very simple on the paper, like, okay, you can just ask the customer what is your income, and you can probably ask him or her to submit few proofs, and then you can just use an algorithm, or probably you can have your own statistical method to come up with a profiling. But there are few challenges around this which we have been facing. Like, one is collecting user data. Like, we have a lot of paperwork which goes into collecting user data. We have sometimes third parties running the background checks when the entities are not the individuals, or you can say the firms themselves. So we run background checks and everything, but before we can even start profiling, we need that sort of data. So collecting user data is one of the pain points which we have. Before we can even run any of the machine learning algorithms, we need just enough data to at least give something to our algorithms, to say, hey, this is the data, please provide us a segment for this customer. But the challenge is, those machine learning algorithms, they require a lot more data than just the customer itself. If someone is coming into you, he or she is ready to provide you full information. Machine learning algorithms just cannot do it on their own. They need data for other customers as well. They need data for or at least n number of customers, where n is usually very large, based on which they can say, okay, I have enough information now to decide where this customer lies, where this profile should lie. Before that, it should know about other customers, what their variables are. And sometimes we are under the pump, and we just don't have enough data, and then we have to rely on third party libraries which we cannot validate the accuracy of. Sometimes we buy data from third party libraries and feed to our machine learning algorithms, only to realize the data itself, the accuracy of the data was not what we expected. And as a result, the profiling itself, we don't know the impact, because profiling of a lot of customers have moved here and there. So those are the things which are the top challenges in this problem statement in profiling customers, when we are using machine learning algorithms. Obviously there are a lot of benefits. The profiling of the customers simply cannot be done without machine learning. Simply using statistics and everything is too risky, and it requires even more data, because then you will be using simple algorithms like, okay, in terms of income, what is the percentile of this customer? Then in terms of geography, we don't know how geography is changing, essentially what market is going down, what market is coming up. So essentially we have artificial intelligence algorithms which are working to track all the market stats and then feeding them to different databases. And according to that database, when you run the statistical algorithms, simple statistical algorithms, they might just give surprising results because they are based on some assumptions. The machine learning algorithms on the other side are based on softer assumptions because they provide you relative data. So they would say, okay, historically this market has been stable, but now I'm suddenly seeing a change. So this is something which is not common. While the statistical, they will go about, okay, this customer has 70% chances of returning something, and then suddenly the market misbehaves, and the statistical models, whatever the constants they have been used, they just needs to be changed. And if those are not changed, it will give you a random number like minus 35% chances. We don't know what that means. So those are the problems with the statistical methods. So that's why we go to machine learning algorithms to come around those problems, because they make more sense in terms of changes or random changes or sudden changes, but they have their own challenges like we discussed. So one of my favorite next cases is anti-money laundering. I hope you have heard about money laundering, and if not, let me explain you quickly. So money laundering is just putting your illegal money into the system as legal money. So while if you see our society as a whole, and if we try to understand like what are the crimes which might happen around us, how we can control them, that's a very, very complex scenario, right? You could have crimes happening virtually anywhere, and it might not be possible for you to run a check across each and every house to see where things are, illegal businesses are being run. But one of the easiest ways of tackling this, if you put an eye on just on the financial services which are running across the society. So what AML essentially means is, whenever a business earns money through illegal things, like let's say someone is selling drugs and earning a lot of money, it's not just that phase that needs to be stopped. Okay, it has happened, we can't do anything about it because there is some sort of freedom which people have, they have misused it, let it happen. In the next phase, let's catch them in the next phase. So when they try to use that money, like if the person just goes to a showroom and says, okay, I need a BMW worth rupees 5 crores, you can immediately run a scan on him. Hey, this person doesn't have a profile, a tax fulfilling profile of rupees 5 crores. How is he earning this much of money? So there are clear signals that this person is doing something wrong. So that's a very straightforward case. You can try to think about it. Okay, that person might try to hide the money, that person might try to segment it, that divide it, and somehow try to forge the process, how he is earning money. But all those have limitations, all those processes have limitations, and if you have strong anti-money laundering teams around you, you can easily catch them. That's the reason why this domain is one of my favorite domains, because it helps us capture or constrain crimes. So just to give you a brief overview, any money laundering business essentially has three stages: the placement, layering, and integration. So what essentially happens is, whenever someone earns money through illegal businesses, they place that money into system very slowly, and in parts. So if someone is like earning money by, let's say, extortion or something, so he or she cannot simply go to bank and say, okay, here are 10 crores of rupees, please submit this. So again, that would be the same case, you would get caught. So what happens is, they in small chunks, they usually place that money, they use their relatives, their friends to just use their bank accounts to hold that money. And once that money is into their accounts, then they use the process of layering. That money moves into system from one account into another account, and from one service into another service. And then in the third stage of layering, that money comes back at the same position where it's supposed to be. Like if I am the person who is doing something wrong, I would just spread the money, and then it will move into the system, and then it will come back to me in the integration phase. So one example could be like, I don't know how many of you guys might have seen that show, Breaking Bad. It had a very good example of the same, when there was a character which was earning a lot of money through illegal drugs business, and then they open up a shop, a car washing shop, and then the overall uh, the profit of that car shop was close to zero. But what they used to show was, they used to forge the documents. They would show that the overall business is going into huge profit by even providing cheaper services. Like if the market cost of car wash is 500 rupees, they would provide in 250 rupees, so they have more cars coming in. And even if they are going into 50 rupees, 80 rupees loss for per each car, they'll still show it as a profit, that we are running the business in a profit, and all those 5 crore rupees came from here itself. So yes, you have to pay taxes now, but your money has been successfully laundered. This is a classical case of money laundering. So let's see what data banks use and how we curb the money laundering process. The single most important data to curb money laundering is, transactional data. There is nothing more important than the transactional data. Yes, profiling data and geographical data, that those all contributes, but the transactional data is the single most important factor while trying to find the process of money laundering, if it is happening through your banks. And just so any financial institute is under strict liability, under not to let the process of money laundering happen right under their nose. If like the government services, they detect money laundering, have a lot of money laundering cases happening across a single bank. They can pinpoint to a single bank which is involved in a lot of money laundering cases, more cases than the other banks in the same market. That bank or that financial institute can eventually wipe out, can be taken out from the market, can have a lot of consequences, billions of dollars of fine can go into it, because the process of money laundering is not just related to illegal businesses, it is very closely related to terrorism funding. So okay, so let's see how machine learning algorithms essentially contribute to this. We don't have actually have much to do in anti money laundering, but just to apply simple clustering algorithms or some other algorithms which detect out of the pattern movements of funds, and we just have to report them further to the agencies which take care of this. But what I feel is, the reason why I included this application is, I believe there is a lot of potential that if we can look into some algorithms which can detect these patterns across the platforms, because each bank, if you see, the money moves across a lot of platforms. It's not moving just within one bank, all the accounts are within one bank, and to collect that data at a single place in itself is a challenge. So if we can have, if you go to the challenges, if we can have just one algorithm which can be applied at different places, and then it can collect all the data together in a meaningful way to say, hey, this is a probable case of money laundering, that can be a lot of that can be lot beneficial for us. um, so just the transactions spanning across multiple platforms or multiple geographies are not only problematic because they cannot be standardized and collected at one place. They are also problematic because all the geographical locations have different jurisdictions and different laws. So you might have heard that some of the banks, like some of the banks in different countries outside, they are wired money, and because they just don't have a feedback loop, they are just not involved with other markets to have an open conversation, or open source their data of transactions, in case one of the governments recognizes that there might be a case of money laundering from our market to their market via these channels. So Switzerland, some of the banks in the Switzerland, I think, and other geographies, might just have enough proofs, but we might have problems tracing the money if it is revolving just across involving certain geographies, and money is revolving around it, but the some of the geographies, they just break the loop to track it. So that's another problem we have. If we can circumvent that problem and still track the money, I think that can be very beneficial. One of the upcoming technologies which can probably curb these is, I think, it has again both pros and cons, but like we are seeing the virtual currencies, they can probably be one solution to this. Okay, another one of the very common cases of using machine intelligence in banking sector is fraud detection. That's probably once you have customer profiling, if you ask that there is only one more place where you can use artificial intelligence, I believe that would be fraud detection. Fraud detection, I think all of us are aware about what a financial fraud is. Some of us might have even gone through unfortunately might have even faced some of the frauds in our own lives, or at least heard about it. Some when someone misuses anyone's credentials to cause them a financial harm, that can be considered a fraud. So mostly, see, with technology, like I said, it's a two-way sword. We are using fintech extensively to provide services in within our reach, within reach of our hands, but that again has a side effect that if proper security measures are not taken, or even a small security loophole can cause disasters, because these are financial services, and essentially every bad guy would be after these. Everyone would be looking to do small, big, every kind of frauds onto financial institutions, because that is one point. If they hit correct, they just need to do it once. They don't need to keep doing it consistently. If they are able to do it just once, that would be enough for them. They can just simply quit after that and erase all the traces. So fraud detection is the single most important case, I think, where artificial intelligence or machine intelligence has contributed the biggest possible way, simply because there is no alternative to fraud detection except using machine intelligence, at least to a satisfactory level of at least to a level of satisfaction. So the reason for this is, we'll discuss in a minute, but let's see what can be the other frauds which can happen in the same industry. The fake insurance claims and fake profiling to get loans are other frauds which can happen, but the transactional frauds are what I would say the single most important factor why machine intelligence is being extensively incorporated by financial institutes. Let's see how. The variables which are commonly used to detect fraud are customer profiles, transactional data, and the most important one is previous frauds, the data for the previous frauds. So what we essentially do is, it's just the game of anomaly detection majorly. So any anomaly, you can say any transaction which completely stands out from all other transactions, that can be considered a fraud, as simple as that. We have a lot of algorithms. There are clustering algorithms, there are support vector machines, and all the simple algorithms can simply detect an anomaly from a lot of transactions, and they can do so in real time. So fraud detection has been a very successful case of using machine intelligence in financial services, because the accuracy levels have suddenly gone too high. The other reason why fraud detection is such a successful scenario is because it needs to happen in real time. There is no alternate to that. You can apply statistical methods, but those statistical methods are just too harsh on the customers, and if you apply the wrong statistical methods, or the statistical methods just have a slight flaw, it might have a huge impact. So for example, any financial institute, if it just applies a statistical method saying, okay, if a customer usually transacts between $10 to $50, so keep looking for all the transactions which suddenly exceed this limit hugely. So let's say we apply a limit of 200%, so $100 become a limit. So if the same customer, he or she tries to run a transaction which is,
Yeah, Vishal, at this point,
Yes.
I mean, there is a question from the participant that at this point, okay, suppose we are working on creating a system or a process to identify valid and non-valid or forged transactions. So, what could be the parameters for that?
Okay. So I think I think we need to go into these parameters slightly into detail. That's okay.
Okay, right, right.
Uh, so these are the parameters which are essentially used. So customer profile is one thing. Like these, the all the parameters related to customer. What are their average spend? So when they are spending across this sector, what is their average spend in this sector? So all those kind of customer profile are one set of parameters. Then the transactional parameters. The transactional parameters can be what is the amount spent, and the most important factor which catches almost 50% to 60% of the frauds is the geographical factor. What is the location of the transaction? So if I'm sitting here in India and I'm making a transaction using my credit card, and suddenly 5 minutes later the same credit card is being reported to be used in USA, the transaction will be detected as a fraud and it will be cancelled out. So those are the transactional parameters. Apart from that, there can be other transactional parameters. What is the time of transaction? So if I'm in IST time zone and suddenly there are multiple transactions happening at 4 a.m. in the morning, some of those transactions might be detected, or a collection of those might be detected as a fraud. And if the amount goes too high, the further transactions might start getting declined. So those are some of the live parameters which we use. Apart from that, the data for the previous frauds, how the
Okay.
did fraud happen, and all those kind of stuff, all those variables combined together, makes a profile for us, makes a data set for us, which we can use to detect fraud. Whoever the
Okay.
party was, I'm sorry, I don't know the
So,
name.
are basically during this process of identification of fraud and valid transactions, I mean, is it good to have this kind of feature detection approach? I mean, can we try out and can we identify few features or parameters of the transactions, previous transaction, to identify the future possible transactions, forging transactions?
See, yeah. So I hope I'm understanding your question correct. So what you're trying to say is, can we detect future frauds? Is
Yes,
that the
yes,
question?
yes.
Okay. Yeah, we have models running for that as well, which very mildly states that okay, there are chances of fraud in this market at this time. So, for example, the fraud detection cases suddenly go very high in December time, because there are a holiday season, and with Christmas around, people do a lot of shopping, and just the fraudsters, they try to just use that, leverage that time to do frauds. But at the same time, that is not much useful, because at the same time we also know that we have to take care of the customers needs, so we don't unnecessarily cancel their legitimate transactions. So that there has to be a balance. Yes, while we can know that there could be fraud transactions coming up in future at this time, but those are not of much value, because at the same time we have to take care that we are not discarding any legitimate transactions, because that has a major impact on both brand image as well as on the overall profit of the business. So
Right,
what
right.
I'm trying to say is, while we can get that data, but I haven't seen that data being used extensively to block those transactions.
Okay, so there is a one another question related to this discussion only, that is multiple failed transaction leads to the forged transactions. Is it the story? I mean, can we say this?
So there is no direct relation as such between failed transactions and forged transactions, but it depends on the failure type. So your failure could be due to technical challenges like your network problems or anything, or your failure could be because the system is detecting that transaction as fishy and it is straight away discarding it. It depends on what kind of failure it is, and I don't think there is a direct relation between the failure of transaction and the fraud, because it's the
Okay,
other way around. When there are a lot of frauds, those can be related to failures of transactions.
right, right, right. Okay, so I think questions has been answered. We can continue, please.
Okay, thank you. Uh, Okay, these are just some of the standard algorithms. I hope you guys all have already figured these out. Like we can use unsupervised machine learning to simply form clusters, and then we can use supervised learning to form just form enough data for us to know in the real time which would be the fraud transactions, which would be the non-fraud transactions. So likely we have k nearest neighbor kind of models. So one of the problems with this model itself is if the number of parameters they increase drastically, it becomes very difficult to run it in the real time. So that's in fact the one of the main challenge of fraud detection is that the transaction needs to be either approved or declined in real time. When if you observe carefully how much time does it take for a transaction to process, it's usually 4 to 5 seconds at max. So that 4 to 5 seconds involves all the time in which the data of that transaction travels from the POC machine to the bank, and then to the destination bank, and then back to the transaction machine. So if you consider all that route of your transactional data moving, a system itself has milliseconds, nanoseconds to milliseconds to decide whether or not a transaction is fraud or not non-fraud. So that's one of the top challenges and one of the top research areas, to not just create algorithms which can detect frauds, but to implement them in a way that frauds can be detection in real time. Usually what happens is there are models which are running behind the system which are generating a lot of data for us to leverage later on, such that when a new transaction comes in, we simply use some sort of indexing to just compare it with a similar transaction and tell whether or not this transaction is fraud. So that's how usually this happens. But if we can have a more statistically approved method, I think that would be again a great addition to this field. Okay, so the next field, the next application where I see machine learning doing a lot is the compliance. So this could be something which is very, very specific to fintech. So I'll just explain to you what compliance essentially means. So like I said, financial services, those are very closely related to not just the monetary benefits or the monetary value which a person has. Like all my assets could be stored with one financial institute. Let's say that's a very common case. So there is lot on stake for me to say that this if this bank do something wrong, or anything bad happens to this bank, that would have a direct impact on my life. And then again, like we saw the case of money laundering, the crime is closely associated with financial institutes. The money flows through these financial institutes. And there are also other factors, like the ability of a government to take control over a geography. It depends to a lot of extent on how financial institutes are operating in that geography. That's a big statement. But that's one of the reasons. So that is the reason why we have a lot of laws and compliance around any financial institute. And like we discussed at the start as well, this is one of the top reason why technical giants like Facebook, Google, will never, or at least in immediate future, will not be able to directly compete with the banks. They will need banks because banks take care of all these compliance. Let's see what are the common compliance laws. Just to give you a broad overview, before that, these compliance rules, these started coming into picture as fintech took huge giants. So and when we had mobiles in our hands through which we can do all the transactions and everything started happening online, there was a 500% increase in regulatory changes. The laws changed a lot between 2008 to 2016, and it didn't end there. It is changing even faster after that. And any breach of any regulation is taken very, very seriously. And sometimes it costs billions of dollars to firms, and it has happened to almost all good banks that every year they spend a lot of money, not only to make sure that they are completely in compliance with the local and global laws, but also to just minimize the damage, because they have accepted that there would be some sort of damage, but for now, but let's try to minimize that damage. So that is another reason why I decided to include this field of compliance into our applications, because I personally believe there can be a lot of research that should go into this area, and how this field is evolving, that needs to be closely monitored with the research field to enable fintech to properly handle this field. So the variables used, again, this field is one of the most challenging fields. What variables to use, it totally depends on what rules are we handling at the moment. So there could be global laws, there could be local laws, and then there could be mandatory requirements to send some reports to the local agencies. So it totally depends on what kind of compliance are we talking. The variables, they can differ hugely, but mostly it's the outliers in the transactions. And apart from that, usually the agencies, they from time to time, they provide the financial institutes with some set of profiles which are suspicious, and then banks need to even strictly monitor those profiles, and any breach of compliance must be reported for those profiles. If a profile has been reported to some of the financial institutes and still the laws are being broken right under their nose, again, that can lead to huge problems for that institute. So how machine learning has very limited role till now in the compliance, but the impact has still been huge. So we have used some sort of artificial intelligence to detect when and how the laws have been changed, and then there has been some work into interpreting those laws, how to tackle those changes, and how to incorporate those changes into our models, such that it can detect the new cases. So one of the examples can be like the laws change constantly. So one of the new laws that might be coming in could be that if there are a market can suddenly be marked as suspicious, that there could be some anti-money, there could be some money laundering happening in this region. So if there are any transactions more than 500,000 in this region, we need to be reported about it. That could be a new law coming in. And banks, I think, usually financial institutes, they get some sort of time period for implementing that law. They might have 30 days, 60 days, 180 days period, depending upon the complexity. They report that this is the level of complexity for implementing these changes, but usually that timeline is very strict within which that needs to be implemented. So changing the statistical models and running them and testing them, it usually takes a lot of time. So if we can have artificial intelligence rightly implemented in this area, I think that can have a huge impact. At least it can be our first layer of defense, where we can say, okay, 50 to 60% of the cases are taken care of automatically, which can automatically give more time to the compliance teams to handle the remaining cases. If the simpler cases can be tackled, at least it can give us some breathing space to handle special cases which could not be handled. So the benefits, again, like I said, we get our, if we use the right algorithms at the right places, we are able to quickly adopt to the changes in regulations. And your reporting, again, they could be more accurate. Rather than an analyst running your rules, and those rules might have some problems in themselves, or the analyst might make some mistakes. Instead, if you have automation and artificial intelligence techniques applied on the reporting side, there are hundreds of reports which needs to be generated and passed to the regulatory agencies for different compliance rules. So if we can even guarantee that, okay, we have enough confidence in the system that 95 to 98% of those reports would be accurate, again, that can take a lot of headache off from the compliance team, and it can provide a huge breathing space to them to handle those special edge cases themselves. And also, like I said, the financial institutes, they have to some extent accepted that there would be some damage due to the compliance rules, because simply because of the fact that many of the compliance rules, they are more of a guidelines. There are no proper boundaries defined that okay, exactly this is what you need to do. There are more of a guidelines. You need to report any suspicious activity. So how do you define that suspicious activity? That is simply not possible using any manual method or even statistical method. So that is where artificial intelligence has a very very strong edge, that uh, it is based on those models which can do those kind of things for us. It can leverage the historical data and can immediately tell us that these are the outliers which should probably be reported. Then it's up to the agencies themselves how they tackle those cases one by one. So like I discussed, the most of the challenges, they are around the quick evolution of the regulations themselves. The regulations, they change so fast that sometimes the previous change which is in implementation might require another change itself. And the guidelines, they are less clear, and there are hard to find laws which have been broken when you do it manually. Like if I give you a set of data, okay, these are all the transactions, and even if you know all the rules, it would be very difficult for you to one by one run those rules, convert those laws into rules according to this data, so you can find where those laws have been broken. So that's a very very challenging task. So machine learning and artificial intelligence techniques, like I said, they are based on that kind of mindset, that they simply detect what is different from normal. And usually when laws are broken, it's exactly the same case. There are outliers, and the outliers are very low in number. So if you apply clustering algorithm and 98% of the transactions are in one cluster and 2% are in one, you can say, okay, there is something probably wrong with these 2%. Let's find out what is that. So machine intelligence, I think, has a huge impact on the compliance field when it comes to when we see what are the top challenges which fintech has. So compliance is right now one of the top challenges for them. Security has always been there, but the compliance is right next to it. Okay, the last application which I would like to discuss, it's a more generic one, but the reason I included it is because it's widely applicated across many domains, and not just fintech. So chatbots, almost all of us have used chatbots at one place or the other, right? These are just robots which are developed to mimic as humans, and those are like the single most important factor, I think, which contributes to reducing the staffing in terms of when it comes to providing customer support. So most of the conversations which happen with the customers, we can detect like 50 to 60% of them are repetitive in nature. Either the customer itself, it again and again it is saying, it is raising the same sort of request, or multiple customers would raise the same sort of request eventually over some period of time. So that is where chatbots are most effective. Let's see how they essentially work. So see, there are again a huge data set that can be used by the chatbot, but the most commonly used variables are the customer details, because eventually those are the customers which would be taking service from chatbots. And even if you consider the case of just the support staff that is providing services to them, they always have access to customer details, so they can better assist them and verify whatever the customer is complaining about or wants from them. So the other set of data which is used are the previous chats and issue resolution data. So what we can do is we can run some sort of machine learning algorithm on the issue resolution data to know whenever there is a new set of data which is received, we can map them to the solutions which were applied on the previous data which was similar in nature. So those are the solutions which chatbots can automatically apply, or at least offer to the customers, or at least raise a request on their behalf. So we can cut down to about 60 to 70% of what support staff does to provide services to the customer. So the machine learning algorithms which are most relevant in this case are NLP, natural language processing, and AI. The decision trees are, I think, decision trees are what I have seen being used extensively, and chatbots are, by the way, not just used for the end customers. We have been using chatbots for almost every single use case which we have been developing to serve anyone, not just the end customers, but even the use cases which are internal, for internal use to different teams. Like analysts might be using some of the tools provided by the technology team. So we are even providing chatbots there. We have a very interesting application of chatbots coming up, which essentially works within Slack integration. So we have channels, different Slack channels for different kind of technology. Like if you have a problem in Java, you can put it on the Java channel, and there would be people helping you with that problem. So leveraging that data, we are creating chatbots which can automatically detect if a similar problem was faced by a person at an earlier time, and he or she can get a similar solution at least till when someone comes in and helps them like manually. So that's one of the most interesting applications I have recently seen for the chatbots. That's completely internal to our technology team. So you might already know about decision trees. Like that's how chatbots usually work. They'll keep asking you questions, and they'll keep traversing a path on that tree, eventually to take you to a node, to a leaf node, which is actually the solution to that problem. Some of the like the benefits, most of the benefits we have already covered, and I'll come back to this slide up once we discuss the challenges. So the top challenges which we have in chatbots are some of those. Sometimes those leaf nodes, those don't exactly provide the solution. Those leaf nodes are actually just an internal node. Actually, we have marked them as leaf node because we say, okay, if you just do this, probably the user problem would be resolved. But let's suppose it was resolved for a customer who was well versed with the product, or who said, okay, I can take it up from here, you have done this much for me, I can take it up from here. So we marked that node as a solution node, leaf node. But the next customer might not be knowledgeable enough like the previous one, and he might need more assistance. So that leaf node needs to be further broken down, and we need to create more solutions, more that solution is a generic one. We need to create more specific solutions for the same problem. So that's one of the top challenges, identifying those leaf nodes which are just generic. You can always call any problem a generic, and have specific parts to it, have specific instances of it. So I think that's a generic problem to solve. And the other problem we have had was like backtracking. Sometimes customer says, okay, I have this problem, and this problem. They have tracked to like level 5 or 6, and they suddenly realize, okay, on the level 4 I probably made a mistake, it wasn't so, now I need to go back. So they're not clear how they can backtrack when they are chatting with bots. With like any person, they can simply say, okay, maybe I was wrong there, let's begin from there. So that has been a challenge with the chatbots. We want to provide them a simple way to just call them, okay, cancel this all, whatever I said this, just forget about this, or probably you remember this, but in a different context. Now, if we see the benefits of the chatbots, see, they have cut down a lot on the customer support. First of all, the very reoccurring problems, or the problems which were like day-to-day work for the customer support, once they were implemented using chatbots. Like sometimes customer wants to know, hey, what are the last 5 transactions I did? Or okay, I don't remember, this particular transaction, can you please help me with the details of this, because I don't think I did them. Or raise a simple request that this transaction I didn't do it on, this is probably a fraud, can you please check this. So they can raise a request for the analyst to analyze and probably cancel that transaction, because that was detected as a fraud, and that should undergo in some other domain. So those are the kind of things which chatbots have been extensively used in, and have been extensively successful with. Another interesting use case which recently I got a chance to involve was the incident management. So that's a very common use case. Sometimes what happen, so one of the services can go down. So for example, let's say one of our servers, it suddenly went down and 15 teams were using it. So all 15 teams would reach out to the owner of that server just to hear the same words from them, that yeah, we know the server is down, we are working on it, and we'll let you know when the service has been rectified. So one of the ways is they can, if they have a list of all the users, they can simply mail to them in advance. Or the other way can be, they just open the chatbot. They open a channel, and on that channel they enable the chatbot, and that chatbot can simply reply to the to the teams, all the teams which are reaching out to them, that yes, we acknowledge the problem, we know about it, and we are working on it, please be patient. So that incident management became a lot simpler once chatbots were applied. Or whenever someone raised a request on the channel that okay, I don't know what is the problem, but the server doesn't seem to be responding. In some cases, what chatbots were able to do was they were able to check the status of the server themselves. So the customer might not, like the internal team member, he or she might not be able to access the server directly. So chatbots can on their behalf check whether or not server is up, hit their API and check the health status. And once it has the full health report, it can confirm back that yeah, the server is up, probably there is a minor issue with your network configurations, please check that. Or if the health is actually down, it can immediately raise a high severity request that the people are being impacted, that this team is the owner of the server and they need to look into it. So those are some of the very, very interesting chatbot cases which I had a chance to go through. Okay, we have discussed the challenges. So now I think I'll open this discussion for everyone to ask any questions you guys might have. That's all I think I had to discuss.
Yes, thank you, Vishal. So we have actually addressed these few questions which were posted in the chat box, right? So actually, we have gone through the different potential issues which we are facing in dealing with the financial transaction or financial data, as far as retrieval or analysis point of view, and particularly in the chat. So on the very first day of our FDP, we have actually have this session on conversational IR. So in that particular chat box, because it is something which is a very attractive product industry is creating. I mean, chatbots, or maybe conversational IR is something which which is explored by the different industries, whether it is a simple financial transaction in industry which is dealing with financial transaction, or any other industry. So it is something which is grabbing a lot of interest and a lot of attractive actually it is, right? So that is something very interesting also. When we are dealing with machine intelligence, it is something which we can do something about it. Now there is question from the participant: is GDPR compliance mandatory in fintech? I mean, can you
Yeah.
answer that? Yeah.
Yeah. Okay. So it's Sandeep. Hi, Sandeep. Thank you for your question. So yeah. So GDPR is one of the latest, compliance requirements which are coming in. Where again, it's sort of, I won't say it's mandatory right now, but yeah, the kind of phase we are going through, and the kind of timelines we are getting, probably in a year or two, it would become mandatory, I believe, across all the fintech. Again, it also depends on the kind of market you are talking about. Like if you talk about the European market, then the compliance laws are a lot more strict in the European market. So GDPR, I'm not entirely sure, but GDPR might be a mandate in that market already. If you talk about Indian market, the laws are a lot less stringent. There are just few regulatory agencies which you need to be compliant to. So I don't think GDPR is mandatory right now in Indian market, but in few markets, I think it has been made mandatory already. Does that answer your question?
Yeah, so I think we can wait for the response. Yeah. So one thing I wanted to just have a clarification on that: how much these compliances from the government are helping a company which is dealing with financial transaction related. I mean, like your company is working on, I mean, how to keep track of fraud transactions, how to keep track of these non-performing individuals. So how government compliances are helping you to design these systems?
So essentially, government compliance are they provide us a set of rules which we need to adhere to. So like if you see it on a global perspective, we have all the data, we have all the customer data and all the transactional data based on which we are providing customers some services. So what government does is it draws a boundary around those services, that these are the services and these are the boundaries within which you can provide these services. So you cannot say, okay, so some terrorist can use American Express network to transfer money from India to probably in some regions of Syria which are probably which are highly suspicious, or which have been marked as areas of high by the intelligence agencies, like areas of high monitoring. So that transaction needs to be declined as a mandate. You cannot allow your platform to help help terrorists move funds from one place to another. That's a very extreme example, but I hope I'm making things clear using it. So government rules are just to make sure that we don't end up doing anything which might hurt society as a whole in short or long term. So unintentional mistakes, those are, I think, what government guidelines help us completely avoid.
Right. So there is another question related to this question only.
Hmm.
That because you're like in your organization, you're dealing with a lot of financial transactions. Maybe naturally these transactions are coming from the actual transactions, not these transaction data is coming from the actual transaction which was happened or which was done by on the behalf of users operation.
Hmm.
So how your organization is maintaining the anonymity or maybe the confidentiality of these transactions?
Oh,
What is the general principle for that?
yeah, that is like a huge field in itself, the field of security. Like every data, like it's one of the mandate requirements, in fact, that all the customer data that needs to be fully secured, and any breaches across any data needs to be reported back or made public as soon as possible. To your question that how usually that data is made secure or handled, is that there are few guiding principles. Like the data in transit always needs to be encrypted, and then again data in rest, again it always needs to be encrypted. Those encryption standards, again, they are defined that these needs to be at least to this level. Any outdated algorithm must not be used. And when you apply just these two basic principles, that any data in transit and any data at rest, both needs to be protected properly. Those should be properly encrypted and then only stored. It completely takes out 80 to 90% of the breach cases. It completely renders the cases of breach useless, because even if someone has a chance to get that data somehow, he or she will not be able to decrypt it, because the encryption algorithms are usually pretty strong. So usually these are the basic guidelines, but like I said, this is in itself is a huge field. And usually what financial institutes end up doing is they don't use a lot of services just to make sure that their data is safe. So for example, most of the financial institutes, they have their own premises servers. They don't use any cloud servers, and even if they plan to use cloud servers, they use it only for the services which do not use PII data, the personally identifiable information. That data should not go on another servers at all. So there are many guidelines, but I think these basic guidelines helps protect the data.
Right. So, okay, I think that's it. That's the question I have personally to be answered. So, okay, I request participants to raise their question if they are having any additional questions, additional queries, or any question related to their area, or maybe related to the financial transaction or financial technology related, so we can address or we can answer. So Vishal, thank you for joining with us for this session, and because it is altogether a new domain, or a new area which where we can explore as a researcher, academic researcher also. Though whenever we are thinking of getting into or looking into the possibilities of research in this domain, this data set or availability of data is always a challenging issue, because these different transactional real time transactional data are bound to kept in the boundary of this organization, so it is very difficult. So I mean, do you have any idea about how a academician person can explore into the possibility of have a joint or combined research effort with organization like yours? Do you have any specific idea?
See, yeah. So we're coming up with one of the initiatives, but it's just a work in progress. Even it's not a work in progress; it's just on the table. See, any financial institute, like I said, they just take their steps back when it comes to the security of the data. They don't like to share data with absolutely anyone. Even the third party services which we use, we just try to onboard them on our own server, no matter the cost. Sometimes it costs us 5 to 7 times more than it would cost if we use the services on their own server. But that's the sort of thing which financial institutes had to take up, because they want to just keep their data secure in their own premises itself. So I'm not sure if there would be a way soon enough to just share the data for the analysis purpose. But yeah, there is something which I would like to discuss in this regarding the same. So we're coming up with one of the initiatives which essentially forges the data. Based on whatever data we have available, it creates fake data, fake transactions which are similar in nature, but completely the original data cannot be in any way identified or traced back using that transaction. So that is one use case we are working on. I hope it can give us some sort of success, because if we are able to successfully create dummy data, the problem is in itself is that the dummy data needs to be in all prospects exactly similar to the actual data, so that when the research things or the algorithms which work on them, which are run on them, they produce whatever result they produce, those are consistent with the actual data. So that's the core problem around which we are building this use case. So once that, I think, it works out, we have that forced data available, I think there would be a lot of scope to open that data for the research purpose.
Right. So I think with this we can close the session, because we have got almost all the questions answered, and we have got this. It is not a path breaking session, but we have somehow explored the possibilities of research, possibilities of possible directions which one can pursue as a research, or maybe of any interest also. Right, so thank you, Vishal, for joining with us for this session, and uh, thank you for your journey also, because you have gone through a lot of transformation, because during your master's or thesis, uh, actually you have been explored in the possibility of data space. So during the second day of FDP, we have got this idea about that, how it is important to have this kind of data space platform, because now we are integrating different informations from different information sources into single platforms. So then we realized that, okay, having this kind of layer or schema is important whenever we are dealing with these real-time applications. So from there to now, we are dealing with a now we are working on a team which is dealing with these kind of financial data, right? So best of luck from my side for your journey, and we will be naturally this session might be a benchmark for you for the future upcoming events also, and for us also, we will be expecting you to work upon these directions and these dimensions, so that in future also we will be approaching you, connecting you for the discussion, right?
Absolutely, sir. That will be an honor. Thank
Yes.
you. Thank you, everyone. Thanks a lot.
Yes. Okay, sir. Thank you, sir. So with this, I would like to thank you to participants and hope that we will be joining the session 3 of the day 4. Though we have a slight change in the session 3, because earlier we have scheduled a session with one of the industry expert for the session 3, but due to some medical condition among his family member, uh, we have to make a change. So now we are going for a session on semantic information retrieval, semantic based information retrieval, which will be delivered by Dr. Sharika Jain, one of the faculty of NIT Kurukshetra. So she will be joining with us in the session 3, third session of the day. So hoping that you will be connecting to that session also. Thank you very much. Thank you.